Hi there viewers, welcome back to Market Fatafat. Thanks so much for staying tuned to ET Now. Now while addressing at the high level policy conference of central banks from Global South, RBI Governor Shaktikanta Das said maintaining sustained growth, price and financial stability continues to remain a daunting challenge for countries of the Global South. Let's go across and listen in to a little bit of that chat.
As all of you would be aware, the global economy has gone through multiple crises. We saw a global pandemic. We have experienced supply chain disruptions and realignments, geopolitical conflicts and wars, a global surge in inflation, geoeconomic fragmentations in trade, technology and capital flows, debt sustainability challenges across the world, including advanced economies, and visible impacts of climate change. Together, they have posed humongous challenges for all central banks, including those of us in the Global South. Whether it was the pandemic-induced growth slowdown or the war-induced surge in inflation, monetary policy responded appropriately to address both the objectives of inflation and growth. The overarching priority was to achieve a balance between inflation and growth.
So that was RBI Governor speaking that what are the key focus areas right now, but the biggest question is that when can we expect the rate cuts to happen, and RBI might turn less hawkish going forward, and those are the words coming in from Vikas Kumar Jain of CLSA Investment, wherein he said that RBI stands on India's earning growth story. He did share his take with us, so let's go across and listen to him.
We've had two really bad inflation prints, and perhaps with those being behind us, we see much higher base for the next November and the December month. Maybe inflation will look much better for those 2 months. That might allow RBI to get less hawkish. So a lot of those things could also create some positivity. But I think there is a part which was higher expectations cooling off. There is a part which might correct, plus excessive rain, limited activity. So yes, earnings, if you have inflated expectations, could be disappointing. But in general, that typical 10 to 15% broad earnings growth story in India is something which is not going away.
Okay, well, let's move on from that and let's welcome on board now Dhvani Patel, founder at FinVersify, as our technical expert for this segment. And once again, Gaurav joins us from our in-house research team. Thanks so much, both of you, for joining us back. And Dhwani, welcome to the show. We'll come to you for your first pick, and that's Oberoi Realty. Now, the real estate space has seen quite the conflicting move amid this entire market slowdown that we've seen. Tell us, what are the levels that you are spotting for Oberoi Realty, and would this be your preferred pick? Is this how you would like to play the realty space going ahead?
Good afternoon, everyone. And talking about Oberoi Realty in particular from the entire space, it's one of the counters that is on my radar, and it's been trading at 50 period EMA, and it's been taking a constant support over there. And in fact, if you look at the broader charts also, the stock is holding up to its upward trajectory from the current levels. So it's a buy coming in, and on the lower side, the stop loss for this counter is at 1880, whereas on the higher side, 2100 is what I'm looking up at.
All right, 2100 is the level that Dhwani is looking at. Moving on, and Gaurav, coming to you for your stock, that is Varun Beverages, is the counter that you're tracking. Tell us about the news flow here.
Well, yes, Varun Beverages recently came up with the QIP, and the floor price was set at around 594 rupees. Now, company has successfully closed the QIP. They have also approved the allocation of around 13.3 crore shares in the QIP process, and the allocation is at issue price of around 565 rupees, which is around 5% discount to the floor price. When we talk about the QIP, company has raised around 7,500 crore rupees via QIP, and they have plans to strengthen their balance sheet, and at the same time, some of the funds will be used to actually prepay or repay the certain loans that the company has. But when we talk about the stock performance, already the market is seen under pressure, and the same trend is continuing in Varun Beverages as well. We are seeing some kind of pressure coming up in the stock, but let's not forget that in the last 5 days itself, the company has given more than 5% returns to the investors. So definitely watching out on how the stock reacts now that the QIP has completed for Varun Beverages.
Okay, That's the news flow on Varun Beverages, the closure of the QIP. That stock is almost 2% lower as we speak. But let's talk about another stock that's been in focus on the back of a couple of announcements that we saw over the last 2 days, and that is UPL. Now, this stock is holding up pretty smartly in today's trade. First up, UPL has announced a strategic investment of $350 million by PE investment firm Alpha Wave Global in its hybrid seed subsidiary Advanta Enterprises Limited, including a secondary stake sale for $250 million, which roughly translates to 2,100 crore Indian rupees. The transaction also includes a $100 million primary equity infusion into Advanta. Now, this stake sale coupled with separate unrelated rights issue of equity shares worth of 3,378 crore positions the company to raise a total of approximately 5,500 crore rupees. These funds are expected to support the company's expansion plans and also deleveraging efforts. UPL has announced the rights issue in a separate filing yesterday, and Alpha Wave will acquire an approximate 12.44% stake in Advanta, including the 8.93% stake from UPL and an additional 3.51% stake through new equity shares issued by Advanta. The deal values Advanta at $2.7 billion pre-money and $2.85 billion post-money. The agreements were signed on 19 November, and the transaction is expected to close by 31st March next year. So lots of news flows coming in for UPL. Let's talk holding up pretty smartly in today's trade.
Well, certainly. We're moving on. Let's put the spotlight on Paytm because that stock is doing pretty well in the weak market as well. Because today, Bernstein has come out with a note on Paytm where they continue maintaining their outperform rating but have hiked the target price to 1,000 rupees now from 750 rupees earlier. What they're saying is that the discussions on Paytm have shifted from survival risk to a discussion of the bull and bear case scenarios. In the bull case scenario, they see Paytm lending partly from its own balance sheet, improvement in the payment margins, etc. And they see 100% upside to their base case EPS estimate. In a bear case scenario, they see payment margins come under pressure and loan disbursal growth is subdued. They see a 40% downside to their base case estimates. But given that there is a decent hike in the target price that is now 1,000 rupees, the stock is holding on to the gains of close to 3% in trade right now.
Okay, so stock holding up smartly today. Dhwani, you've picked out Axis Bank. Now, give us a sense of how you are viewing this chart because it's been in quite the consolidatory phase over the last, let's say, 6 months, YTD. In fact, in the last 1 month, it's also given a slight negative return as well. So, do you believe that this consolidation is now over for the stock? Can we expect some positive move, or do you see this consolidation continuing for a little more time going ahead?
So it's more of a consolidation range play that I'm looking up at in over here in Axis Bank. It's more of the range that we are looking up on the bottom side. It's forming a support at 1120 levels to 1115 levels, and on the higher side 1200 is where the stock is taking up a resistance. So from the current levels, given that Bank Nifty is also taking a support near its 200 DMA, and we are seeing that private banking is playing out the role over here, Axis Bank remains in focus for those reasons, and from the current level the buy can be initiated over here, keeping a stop loss on the lower side at 1125, and on the higher side the targets that I'll be looking up at is 1200.
Alright, looking at 1200 targets coming in for Axis Bank, but moving on then and sticking with the banks, let's get you an expert voice. As the credit economy gets democratized, the large private banks will be the biggest beneficiaries. Those are the words coming in from Morgan Stanley's Rhythm Desai. He believes that the banks will ride the capex upcycle and turn around amid healthy macros. Let's go across and listen into him.
Low-hanging fruit is private sector, large private sector banks. They're trading like utility stocks. Utility stocks, by the way, are trading like growth stocks. 10 years ago, the large private sector banks, the top ones used to trade at 3, 4, 5 times book, and the utility stocks were trading at 1 to 2 times book. Now utility stocks trade at 4 to 5 times book, and the private sector banks trade at 2 times book. So I think if you want to make a trade, it requires an enormous amount of patience to go through this, because I don't know when the tide turns. Everybody is very cautious and skeptical about the banks, but that's, I think, the trade you want to put on in the market right now. So that to me is the low-hanging fruit, but it's difficult to digest this because it may not give you immediate gratification. So the trade there is to buy the large banks with good deposit franchises and good risk controls, because they will be the biggest beneficiary of this democratization of credit that I think is underway.
Well, let's move on from that and move on from the entire banking space. Talk about real estate once again. Gaurav, you've picked out Godrej Properties for us. It's a positive news flow and the stock is also reflecting that. Tell us what it is.
Godrej Properties is one of the stock which is actually trading in green today, and the reason being that the company has said they have acquired around 53 acres of land which is situated in Joka, which is situated in Kolkata. What they are saying is that the land offers a development potential of around 1.3 million square feet of residential area, and this can actually contribute around 500 crore rupees in a revenue, in terms of revenue potential in the coming quarters. The company is saying that the land is actually strategically located in the fast developing micro market of Calcutta, and with IIM Calcutta also being near to it, they are actually being a little positive about the land acquisition that they have done. Now we are seeing the same kind of trend in the stock performance also, because investors are also taking this in a positive way. The stock is up more than almost at around 1%. So definitely watching out on Godrej Properties on the back of this news flow.
All right, that's all about Godrej Properties then. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back with more buzzers in feed right now.
Hi there, welcome back to Market Fatafat. Viewers, before we go and discuss all the buzzing stocks, just on a quick note, wanted to thank all our viewers for your trust in ET Now. It's been the #1 English business news channel for the last 12 consecutive weeks. This is no small feat, and we have all of you to thank for making us reach this achievement. So thank you so much for posting your faith in ET Now, and we aim to stay ahead of the curve with ET Now. We hope you join us in this journey. Going ahead is well, it's been a glorious 12 consecutive #1 weeks for us, and once again from the bottom of our hearts at ET Now, from the entire team, thank you so much for reflecting your confidence in us and choosing to watch us as your business news channel. But on that note then, let's move on. And Dhwani, you've picked out CDSL for us on the charts. You know, surprisingly, this has been making to a lot of analysts a radar. Tell us what your view is over here. I'm very keen to know what you also have to say about this stock and what are the levels that you are spotting.
First of all, congratulations to the entire ET team. This is a big achievement for 12 consecutive weeks being a #1 over there. And definitely it's an immense pleasure to be a part of the same and giving the views on the channel. Now, talking about CDSL in particular, yes, definitely. CDSL, BSE, these are some counters which have been on the technical radar for quite some time, because the stock have been trading in an upward rising channel. Talking about CDSL also, if you see over here on the daily structure, the stock has been trading in its upward rising channel and has been constantly trading at a higher low, and the momentum has been there into this counter. In today's session, this stock is crossing above its important EMAs over here, and from the current level, given a buy recommendation, one can hold on to it for a target of 1675, and on the lower side, the stop loss that one needs to maintain is of 1480.
Okay, so those are the levels to watch out for on CDSL. Let's also talk about a stock that's been under pressure since the morning today, and that is Nykaa. Now, this is on the back of a brokerage note coming in. You have BofA, which is Bank of America Securities, has downgraded the stock to an underperform rating, and they've also cut the target to 150 rupees from the earlier 225. Remember, earlier the rating was neutral, now it's been cut to underperform. Now, they've cut estimates to reflect the slower pace of margin improvement and quick commerce traction. They also expect quick commerce uptake in urban areas to impact Nykaa's revenue momentum. They expect the apparel industry growth to remain subdued in the near term, and they believe that Nykaa may find it difficult to balance growth with profitability. Even competition, they say, is likely to rise with Shein entering the market, and they believe the pace of margin improvement in the entire BPC, which is the beauty and personal care segment, will be slower than market expectations. So, negative note coming in, rather bearish note coming in from BofA Securities on Nykaa. That stock is trading with cuts of almost 1.5% as we speak.
All right then, that's about Nykaa. And moving on, let's put the spotlight on two of the chemicals names. And first up, it's Deepak Nitrite, and the other one is PI Industries, wherein both of them today, Morgan Stanley has come out with a note. First up on Deepak Nitrite, they continue to maintain their overweight stance, but have cut the target price to 3,000 rupees from 3,295 earlier. And on PI Industries, maintaining an equal weight stance, but have hiked the target price to 4,310 rupees from 4,300 rupees. So a slight increase there. What they are saying is that the Q2 has showcased the lack of pricing and the margin levers for the incumbents, and they've witnessed another round of earnings cut, guidance resets, as well as limited confidence for FY25. Now, earnings, while nearing a trough, are not fully de-risked as the recovery expectations stay bullish. The demand green shoots not without hiccups. Pricing conditions remain tough, and the wallet and the market share focus implies monetization at subpar returns. Now, they see more visible signs of repair in the non-agrochemical commodity chemicals, and amongst the space, they do prefer Deepak Nitrite, but for now, they did cut the target price, and hence the stock reaction, where the stock is down close to 2%. And even for PI Industries, there was just a mild increase, and the commentary was not that great. That stock too is in red today.
Okay, so both of these chemical names reeling under pressure, but Dhwani, you've picked out Alchem Labs for us on the chart. Last 1 month, last 6 months, not done much. It's been rather flat. So what's your view going ahead? What are the levels that you are expecting to spot for this one?
Definitely, the stock has definitely not shown much of momentum over here if you compare in over a period of time. But then what is interesting is on the daily chart, we are taking the stock at a support of 200 EMA. Since last few sessions, the stock has remained in this range and has been constantly taking a support around the same levels. And from there, we are seeing a bounce confirmation coming in today's session as well. So it's more of buying at the bottom at the investors moving average. We are looking up at the stock to move up on the higher side around 6,000 levels, given a buy at the current rate, and on the lower side 5,400 is the stop loss for the same.
Okay, so those are the levels to watch out for on Alchem Labs, but let's talk about another stock that's been slightly under pressure since morning, and that's Dr. Reddy's Labs. Now, Dr. Reddy's on Tuesday announced the completion of the Good Manufacturing Practices, which is the GMP inspection by the US FDA at its API manufacturing facility in Bolaram, which is in Hyderabad. The inspection, conducted from November 13 to November 19, concluded with the issuance of a Form 483 containing 7 observations coming in. Dr. Reddy's has stated its commitment to addressing these observations within the stipulated timeline, ensuring compliance with the regulatory requirements. So, well, yes, it's a very negative news coming in for this company. You have Form 483, which is issued with a whole lot of 7 observations. So, seems like Dr. Reddy's has a lot of work to do going ahead to keep in check with all the regulations of the US FDA. But on the back of this news flow, the stock is trading with cuts of more than 1.5% as we speak.
All right then, that's about Dr. Reddy's. But Gaurav, take us through what's the news flow related to Coforge and why this stock is in focus today.
Coforge is in focus, and the reason being that now Morgan Stanley has actually maintained their overweight rating and a target price of 8,800 rupees on this stock, and this is because of the Asia Pacific Summit of 2024 is what Morgan Stanley highlighted. What they are saying is that the company is expecting some kind of positive push coming up in the coming quarters. They are expecting large deal pipeline and a robust deal pipeline to remain for the company. At the same time, management also said that the medium term target for the company is going to be around $2 billion of revenue, which is achievable as per Morgan Stanley. Apart from that, management said that demand is actually coming back with broad-based trends actually is what they are witnessing across the verticals and geographies, and at the same time what they are saying is that the margin is expected to remain stable over the next 12 to 18 months. So very positive commentary coming up from the Coforge management, and at the same time now on the back of all these segments, management is expecting Signite margins to remain more than 18% for 4Q of FY25, and on back of this, when we talk about the stock performance also, the stock is trading in green. So definitely watching out on Coforge on the back of the positive note as well as positive comments coming up from the management.
Okay, so things are looking good for Coforge right now. That stock up above 1% as we speak. On that note, let's talk about another stock that's holding well, and that is Grasim. Now, Grasim says for Birla Opus has raised its annual capacity for the paints business to 866 million litres per year, and Birla Opus is the second largest decorative paints brand by installed capacity. Total capex for the paints business has come in at 8,470 crores till September of this year, and production is ramping at 3 plants, which is their Ludhiana, Panipat and Cheyyar plants, which were commissioned in Q1. Now, Grasim's Birla Opus Paints has also started a 4th factory at Karnataka. Trial production has also been started at the Chamarajnagar and the Mahad plants. So, lots of expansion activity happening. Capex is in full swing. The company is also very bullish. Grasim is also very bullish rather than Birla Opus. And on the back of that, Grasim is doing pretty well, up 1.6% as we speak.
All right, that's the news flow related to Grasim. But Dhwani, that stock is almost at the day's highest point as of now. How are you looking this on the technical front?
Yes, on the technical front as well, the news flow that has come in, it's supporting it via the moment that we are seeing. We're constantly seeing a narrow range bar, but in today's session, we are seeing an outside bar in technical terms where the stock is breaking out through the range of the previous 7 sessions, and from there we are seeing a buying action coming in. The other cluster of evidence here is that the stock is also taking a support at its 200 DMA, and from there we are seeing this bounce coming in. So the conviction of multiple cluster of evidences suggest a good buy action coming in this one. From the current levels, the stop loss for this one on the lower side has to be maintained at 2490, and on the higher side the target is 2650.
Okay, 2650 on the upside. So positive outlook coming in for Dhwani, also for Grasim. But on that note, viewers, that's the last stock that we wish to discuss on this show. Dhwani, Osho, as well as Gaurav, thank you so much for joining us on the show. And on that note, we'll wrap it up on this edition of Market Fatafat. But pardon me, it was Ashish who joined us on the first segment. So Ashish, Dhwani and Gaurav, thank you so much. But you stay tuned to ET now as closing trades takes all the action forward.
If you like this video, then like, share and subscribe to ET Now.